Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. Let's take a look at the stories for the day. India is showcasing its mettle at the ongoing Defence Expo in Gandhinagar, Gujarat. It is the first such event where only made in India equipment are on display. Prime Minister Narendra Modi inaugurated the event by highlighting that India has achieved rupees 13,000 crore of defence exports in FY22. While this is heartening, exactly how self-sufficient have we become in our defence production? For example, imported Bofors guns played a crucial role in India's victory over Pakistan at Kargil about 23 years ago. Have we found an Indian replacement for such weapons? Let us find out.
We hope the day never comes, but seeing these guns firing in anger would be a sight to behold, as evidenced by the tests you just saw. While these guns are not in firing mode while on display at the Def Expo 2022, they are still every bit as impressive. The 155mm 52 caliber Advanced Towed Artillery Gun System, or ATAGS, which the DRDO is developing in partnership with the Tata and Kalyani groups, has become an indigenization milestone. Now, the DRDO has produced an offshoot of the ATAGS called the Mounted Gun System, or MGS. The new weapons system is a prominent part of the India Pavilion and the DRDO display, which is the Def Expo 22's centerpiece, owing to the Atmanirbhar Bharat emphasis. The mounted gun system is made up of the ATAGS gun mounted onto a wheeled tractor, from where it can be fired without lengthy preparations. Bringing the MGS into action takes just 80 seconds, leaving the enemy with little time to react. Bringing it out of action also takes 85 seconds, a godsend when the enemy brings down counter-fire. The Indian Army's artillery plan calls for the purchase of 814 MGSs, and the DRDO is confident about the superiority of its system because of its high accuracy and performance in desert and high altitude areas. The next example of successful indigenization is the DRDO developed Wheeled Armored Platform, or WAP. It will be the basis for a family of mobile, protected, multi-purpose vehicles. They will also be able to serve as command posts or conduct reconnaissance, even in chemical, biological, radiological, and nuclear battlefields. The amphibious and highly mobile 8x8 wheeled vehicle will be armed with a 30mm cannon and an upgraded Made in India sighting system. Private player Larsen & Toubro is working with DRDO as a design-cum-production partner for this project.
So the big difference in the making of weapon systems now in India is that the DRDO is making these multi-purpose weapon systems that can be used by the military for one task or the other. So the army is given many more options, and that's much better than buying a weapon system from abroad and then not being able to use it for any other purpose other than the one for which it was sold.
Another Made in India weapon system that may be headed for success is DRDO's 25-ton light tank, meant for mountain border areas, jungles, narrow roads, and bridges. The 2020 Chinese encroachment across the line of actual control galvanized the DRDO into resuming work on the tank under Project Zorawar, named after the legendary Sikh general who took his armies deep into Tibet. By November 2024, the DRDO is scheduled to finish trials and begin delivery to the army. The expo has more than 1,300 exhibitors from the Indian defense industry, along with some joint ventures with foreign original equipment manufacturers. More than 100 startups are also making their presence felt. PM Modi said that the expo would also see the signing of more than 400 memoranda of understanding, a record. The data too supports that progress has been made in indigenization. A business standard analysis of defense capital allocations in the union budgets shows that spending, after adjusting for inflation, has grown at a compounded rate of around 7% between FY12 and FY23. What shows a discernible shift towards indigenization is that while domestic rupee denominated spending has grown at 8.2% a year on average over the 11-year period, imports have grown at just 1.2%. In the base year of FY12, India imported $5.7 billion worth of defense equipment. In 2022-23, it intends to import $6.5 billion. It does appear that the efforts to indigenize are slowly making an impact. But while a certain measure of success has been achieved in developing key weapons platforms, crucial gaps still remain. Experts believe that developing indigenous aero engines is a strategic necessity given the proliferation of unmanned aerial vehicles and low-cost cruise missiles, and the restrictions placed by foreign governments on the export of their engines and components. Indigenizing gas turbine engines can save the Ministry of Defense 3 trillion rupees in the next 20 years. But due to a trust deficit and the absence of inclusive policies for involving qualified and globally certified private players, aero engine research and development remains a monopoly of the public sector. Further, the lack of testing infrastructure in India, for instance, caused a delay of 6 years in the development of the Kaveri engine that was originally meant for the Tejas light combat aircraft. The engine was, however, deemed unfit for Tejas as it could not attain the peak thrust required for the fighter jet during flight testing in Russia. At present, India continues to search for foreign partners to co-develop heavier combat jet engines. Also, be it artillery guns or India's ambitious stealth combat aircraft, there's one last crucial factor that could make or break these projects.
So the design and development of many of these made in India systems is more or less complete, and they have to now go into production. And how well the DRDO interfaces with the private industry or the DPSUs that build these weapon platforms will determine the success and failure or how they have been received by the military.
At DEF Expo 2022, Prime Minister Narendra Modi set a target of 40,000 crore rupees in annual defense exports, representing a near threefold jump from 13,000 crore rupees in FY22. While deals like this year's sale of BrahMos missiles to the Philippines stand out as examples of India's success in this regard, meeting the PM's ambitious goals will require a quantum leap in India's weapons making capabilities.
India's growth story is also being written by individuals. Zerodha co-founders Nikhil Kamath and Nikhil Kamath increased their donations by 300% in FY22, becoming the 9th largest individual givers in India. Business Standards Raghav Agarwal caught up with one of the brothers, Nikhil Kamath, to talk about the future of fintech and funding in India. Let's listen in.
Hi everyone, we have with us the founder of True Beacon and co-founder of Zerodha. The first question, Nikhil, I would like to ask you is, what do you think really made True Beacon and Zerodha successful?
I would have to say right time, right place. I think we started in industries which were kind of ripe for a change when we began.
Yeah.
And, being in the right place at the right time and the right team, all of it together, I think has made these companies successful.
In the world of startup, your startup stands out because, you chose to bootstrap and then you focused on being cash flow positive. So in today's world, what advice do you want to give to the new entrepreneurs who are thinking of um, starting their own startups, and which factors do you think must be considered before going for bootstrap or going for funding?
You see, it's not a factor of what people want to do. It's more a factor of what the market is willing to give at that point.
Mhm.
Considering where the world is today with high inflation and rising interest rates, it will be harder for people to raise money or capital in the manner they might have 5 years ago or in the last decade in that cycle. So I presume more companies will have to focus on profitability. More companies will have to kind of like, it can't be, it takes 5 years to turn a profit or 10 years to turn a profit and raise money today. I don't think that will work in the future as it might have in the near past.
Recently, we have seen from the data that investors are growing more cautious towards investing in startups, and markets have also not taken the IPOs of several startups very positively. So in this, how do you see the future of fintech in India?
Well, fintech, I think, is a big opportunity. Nothing has changed there. Penetration levels remain very low. Just about 2% of India has access to equity markets, for example. So the opportunity is immense. Can I call the near-term cycle of what will happen in the next 6 months or 2 years? Probably not. But from a 10, 20-year outlook, I think it will, the number of people using fintech products will definitely go up.
In this, how do you see the role of Bharat, the rural India?
I think big, right? Like as our GDP per capita, let's say it's at 2 lakh rupees or close to 2 lakh rupees today, as that number goes up, a lot of this growth, I think, will happen from rural India. I hope it's a bit of a counter argument to what we have seen play out in economies across the world. But I hope we do not go the China way and do not walk into urbanization in the manner that they did. I think history has taught us that that necessarily is not the best way to go about it. At some level, I presume the future of cities in a world dominated by climate change issues will be more fragmented in nature, and there will be a lot of backward immigration into rural economies, and you'll have many economies of scale versus these large metropolitan cities like we see today. And I think that pattern will probably exaggerate the growth at which rural India will adopt fintech and tech overall, I think.
Nikhil, we have seen that the inflation in India has been quite high. In September, also we saw inflation of 7.4%. How do you think in coming days it will impact the markets? Will the have markets factor that in, or we can see what do you think? How do you think markets are performing in near future?
See, markets are strangely strong. I can't quite put my finger on why the world is correcting 25-35% and we are pretty much where we were, and we have not really corrected. Inflation looks like it's, whenever you look back in time and you look at when inflation has peaked, it does not tend to be a 1 quarter or a 3 quarter problem, but it is a longer problem which lasts many years. So I think the same will happen again. I think inflation will be around for a while. Interest rates will be up. It makes a significant difference. If you were able to borrow a home loan at 8-9% versus doing it at 16-17%, if interest rates remain elevated and continue on their current trajectory, the EMI required, the appetite for buying homes, all of this goes down. That in turn will have significant impact on consumption in the country and in turn the stock market. So I think that will happen, notwithstanding the fact that stock markets are not reflecting that in terms of price activity today.
We have seen investors investing more and more money in the markets in the past 2 years, especially in the COVID duration. Where do you think where do you think the next wave of innovation in investment will come from? Retail investment. Which sectors do you think are going to be at the forefront of it?
I hope more innovative companies come and list on the exchanges. For some reason, we seem to have less of that. Even on the tech side, we are more a services play than a play of innovation. I hope that changes. I think tech around climate, not maybe in the next 5 years, but in the next 10, 20 years, will become a significant sector. uh, you know, specifically maybe things like geoengineering companies which attempt to modify or alleviate the side effects of climate change. I think these guys have a big opportunity, and everything ancillary to that. It could be renewable energy, carbon negative companies, stuff like that. I think that'll be an opportunity.
All right. Thank you, Nikhil. Thank you so much.
SEBI has indeed made the investment ecosystem much safer, as pointed out by Kamath. He also believes that the next few years may be difficult, just like Samvat 2078, when equity markets battled a host of headwinds like tighter monetary policy and the Russia-Ukraine war. As we enter Samvat 2079, we take a step back to delve into what went wrong in Samvat 2078 since last Diwali.
Indian equity markets' performance in Samvat 2078 is poised to be the worst in 7 years, with a near 2% slide each in benchmark Sensex and Nifty indices. This comes after Samvat 2071, when the two frontline indices had dropped 4% and 3% respectively. Analysts attribute the dismal performance in Samvat 2078 to the geopolitical tensions that led to spiraling inflation and hawkish action from global central banks, especially the US Federal Reserve.
The Ukraine war, which started in February, was unexpected. And despite rate hike and global slowdown, the OPEC and Russia joint effort to cut the oil also unexpected. What was expected was a stimulus post-corona, $20 trillion of stimulus all over the world that led to the inflation. But these two unexpected factors crashed the market from the peak, and therefore both Sensex and small cap, we are almost flat in the current Samvat year. Unexpectedly, Ukraine thing happened. Similar thing happens in Taiwan or Russia and OPEC. Whatever happens to their economy, not bother about their economic conditions and continue to cut down the oil price, then yes, what we saw this year can be repeated next year. But otherwise, I am very bullish. Minimum 15% return one can expect.
The underperformance in Samvat 2078 was sharper in the broader markets, especially in the BSE Mid-Cap Index, which lost 3%. However, among stocks, defense PSUs along with Adani and Tata Group shares firmly defied the weak broader market. Around 207 scrips outperformed the index in Samvat 2078, of which 143 stocks gained over 10%. Moreover, Adani Power, Adani Total Gas, Adani Enterprises and defense PSUs, Bharat Dynamics and Mazagon Dock shipbuilders saw their market price more than double during Samvat 2078. Nifty majors ITC and Mahindra meanwhile surged 54% and 48% respectively. From sectors, the power pack gained the most, followed by capital goods, FMCG and automobiles. On the flip side, realty, IT, metal, healthcare and consumer durables were the top laggards. Going forward, experts are betting on select pockets along with small cap stocks that maintained a lead over frontline indices in Samvat 2078 with a 1% gain.
One should avoid cement steel, but one should be bullish on telecom. Definitely the private banks, also even the public sector banks. So these are the two topmost, and selective pharma stocks. These are the three sectors which should do well. It will be again in the small cap. There is going to be a massive wealth creation in the small cap in the next 1 year.
That said, analysts caution against the near-term texture of the market, which is likely to remain volatile. As per HSBC Global, the US Fed's continued hawkish stance, rising dollar and the prospect of recession in the US and Eurozone paint a negative outlook for equities in the near term. While India may not be immune to such risk aversion, we see several positives too and would view market volatility as a good buying opportunity in structurally winning businesses. That said, global trends will guide the markets today. The Q2 earnings of index majors Reliance Industries, Hindustan Unilever, Bajaj Finserv and Ambuja Cement will also be on the street's radar.
The year gone by was not easy on the aviation sector either. It is slowly trying to recover from the pandemic turbulence. And there is an alliance of airlines which has been trying to cut the hassle in air travel. Formed in 1997, Star Alliance has been providing seamless connectivity to flyers. It just celebrated its 25 years of existence. Our next report has more on it.
Star Alliance is the world's largest alliance of airlines with 26 carriers under its wings. It has a presence in 184 countries and it boasts of a fleet size of 5,003 aircrafts which land and take off from 1,294 airports. In 1997, 5 airlines, United, Lufthansa, Air Canada, SAS and Thai Airways came together to create a network to ensure that people can travel to any major global city without the need for separate tickets. Star Alliance network currently offers more than 10,000 daily flights. The alliance's combined fleets also serve over 50 hub airports. Each airline that is part of Star Alliance has its own hub for important routes. Some of the notable hubs are Frankfurt Airport, Istanbul Airport, Beijing Capital Airport, etc. Apart from seamless connectivity, Star Alliance members provide several benefits under its 2 tiers, Gold and Silver. Gold benefits include priority airport check-in, extra baggage allowance, lounge access among others. Passengers cannot enroll in the Star Alliance directly but can join the alliance by enrolling in a member airline's frequent flyer program. A frequent flyer program is a loyalty program offered by airlines where passengers can get rewarded in points based on miles covered, segments, etc. Flyers can redeem the points later for air travel and other purposes. Usually, the gold status for Star Alliance is given to customers who have reached the highest level of a member airline's frequent flyer program. Air India has been a member of Star Alliance since 2015. The grouping's chief executive recently said that the airline under the Tata Group has an opportunity to enhance its product and services to better leverage the opportunities offered by Alliance memberships and digital add-ons from Star Alliance.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
But of late, Star Alliance has been facing criticism for not offering much to its gold members, besides the business class lounge access and liberalized luggage policies. That's all for today. Catch the next episode of the morning show on Monday. Bye-bye for now.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.